2023, possibly the year of the home buyer. Nationally, the real estate market has shifted significantly since the first half of 2022. However, is it all the doom and gloom that you see in all the fake news headlines? Well, we're gonna let the data speak for itself. So today's video is the November real estate market update for the city of Chicago. Make sure you stay till the end, as I'm gonna be going over some of the biggest opportunities and what this means for you as we enter into 2023 if you're thinking about buying or selling a home in the new year. Thanks again for being back on the channel. My name is Jordan Pyle. I'm your go-to Chicago real estate agent, and we bring videos like this every single week talking about living in Chicago and Chicago real estate. So if this video has been valuable for you today, please do us a favor and like, comment, and subscribe. And if you're thinking about making a move in 2023, feel free to text me and we can get you set up for success. My team and I would be honored to help you achieve your real estate goals. All right, let's get on to today's video. All right, so we're talking about November market update. So we're actually taking the month of October stats. The stats that I'm using here, and we're gonna jump on into my screen here in a second, are actually from the Chicago Association of Realtors Fast Stats. So these are official stats produced by the Chicago Association of Realtors based on data that they receive from all of the, I think it's like 30,000 plus agents throughout the Chicagoland area and about 17 to 18,000 in the city of Chicago. So we're gonna be focused mainly on the city of Chicago, as that is the market that my team and I serve. Now let's just lay out some standards of data so that you know exactly what we're referring to and so you can equate this in the best way possible. As I mentioned, we're gonna look at the October stats. We're gonna look month over month from October of 2021 to October of 2022, and we're also gonna look at year-to-date stats from 2021 to 2022. We'll give you a couple different perspectives here so you can get a bigger picture on what's actually happening in today's real estate market. Lastly, we're only gonna be focusing on attached single-family homes. So these are condos and some townhomes. We're not looking at single-family homes here in Chicago. The majority of what we sell and the majority of the neighborhoods that we're discussing here today actually have more condos than they do single-family homes. All right, so if you're tuning into today's video, these are the things that I promised to go over in this video. First, we're gonna start out with sales data. Secondly, we're gonna talk about inventory. Third, we're gonna talk about pricing. And then fourth, in the conclusion, we're gonna talk about the biggest opportunities that I see for somebody that's thinking about making a move in 2023. All right, so let's get it underway. Let's start off with the sales data. So let's jump on over into my screen so that we can talk a little bit more. All right, so now that we're in the screen here, you can see at the very top, we're talking about attached single family market overview. We're not talking detached, we're not talking single family homes, only attached properties. All right, so jumping into sales data, let's first look at closed sales and then under contract. These are the two we're gonna focus on for this section of the video. We're gonna talk first about monthly, then yearly, and then we're gonna head on into under contracts, monthly and yearly. So closed sales, 2021 in October, we had 1,456, so 1,456 homes that closed. In October of 2022, this year, we had 1,001. So this is a decrease of 31.3% in the amount of closed sales. So this is significant. Now let's look at year to date for the same stat line. 18,833 closed sales in 2021, all of 2021. All of 2022 so far, and granted, we're not through the entire year yet, so this is basically excluding November and December. So this is 10 months versus 12 months, and we're seeing about a 13.7% decline in the amount of closed sales. So once this year finishes, this will probably fall somewhere between 10, 12, 13%, right? So either way, we're seeing closed sales down year over year and month over month. All right, under contract. So these are contingent and pending. So this basically means that any property that has an offer on it and now they are working their way through the contract to close process. So 1,466 in October of 2021 and 884 in October of 2022. So this is actually a 40% decrease in the amount of homes actually getting a contract and going under contract towards the closing table. So this is just showing that a lot of people are sitting on the sidelines and there's not as much activity in general in the market. Now, if we look at year to date, 19,218 under contract, and year to date 2022 is 15,964, which is about 17% decrease from 2021. All right, so that wraps up the sales portion. So now we're gonna head into inventory. I think inventory is my favorite metric to look at because it really paints a good picture about what is actually happening in the real estate market. So we're gonna look at new listings for this category. We're also going to look at the market time, how long properties are sitting in the market, month supply of inventory, which is somewhat similar, and then inventory of homes for sale. So the bottom three and the top one. So let's start off with new listings. So new listings, we're gonna run through the same information before October 2021 to October 2022, and you get the picture. So new listings in October of 2021 were 2,876. So almost 2,900 homes. October of 2022 was about 2,000 homes. So we saw a 31.8% decrease in the amount of new listings coming to the market. And a huge reason for this, in my opinion, well, there's a few, right? There's a reason that we have a lack of inventory. First off, new home builds are low because, cost of raw materials, demand for new homes, those are basically, holding back developers from bringing new inventory to the market. Also, you have interest rates that have skyrocketed over the last 3 to 6 months. And now all of these people that would be sellers, that are maybe move-up buyers and they already own a home, but they're looking to buy a new one. Well, when you have a 2.5 to 3% interest rate, and now if you go and buy a new home, you're gonna have somewhere between a 6 and 7% interest rate. A lot of people are deciding to stay put unless they absolutely have to move. So this is withholding a ton of inventory that would be coming to the market. So those are a couple of reasons why we're seeing less inventory and new listings hitting the market in general. So if we look at year to date now, we have 37,310 versus 29,784, which is about a 20% decrease in new listings year to date. That's the new listings. So let's jump down to the bottom here and let's talk about market time. So market time, October of 2021 was 80 days on the market. So an average home would sit on the market for, 2.5 months, almost 3 months. Today, we're sitting around 67 days on the market, which is actually 16.6 or almost 17% less time on the market. Now, this is where it gets interesting, right? Because we're showing that the market is slow. However, this stat here says that homes are sitting on the market for shorter periods of time. And this could be just because we're still in a seller's market, basically meaning that there's still more demand than there is supply. However, this is just interesting to me because everything you hear in the headlines shows that homes are taking forever to sell. They're not selling at all. And this right here shows that they're actually selling faster than they did last year in 2021 by 17%. And if we look at year to date, the numbers are similar. 79 days on market in 2021 versus 69 days in 2022, which is about 13% less time on the market this year versus last year. Let's jump down to month supply of inventory. We actually have 3.5 months in October of 2021 versus 2.9 months, which is a 17% decrease year over year. So these numbers are typically going to be somewhat similar between market time and month supply of inventory. And you can see year to date, this doesn't exist because the year has not yet finished. So, all right, and then lastly, as it relates to inventory of homes for sale, 6137 versus 4371, which is a staggering 29% decrease in the amount of inventory of homes for sale. So less homes on the market, but the homes that are on the market are actually selling faster by about 17%. All right, and the third category we wanted to discuss was the pricing, right? So we're gonna look now at median sales price, average list price, percent of original list price received, and that'll be the last one for this section. So let's jump on into median sales price. So October of 2021, this was sitting at $345,000. October of 2022, $330,000. So not much different, but about a 4.3% decrease in the median sales price. Year to date, sitting at $352 in 2021 versus $354, an increase of 0.6%. So even though everyone says the market is in shambles, we're actually seeing median sales prices up year over year from last year. And this is likely just because there's less homes in general by about 30% on the market, and there's still strong buyer demand. So when that is the case, supply versus demand, less homes on the market, the homes that are on the market and that are selling are gonna sell ultimately for more. I think this is super interesting because actually in the 6 out of the last 8 recessions, we actually saw home prices increase. And those 2 recessions that are the outliers was the Great Recession of 2008 and the Great Depression in the 20s. Right, average sales price, we are looking at October 2021, $453,382 versus $417,364, which is about an 8% average sales price decrease from month over month from October of 2021 to 2022. Now looking at year to date, $439,259 in 2021 versus $445,092 in 2022, which is 1.3% increase in average sales price. Homes are just selling for more. Average list price, this is less significant than the 2 that we just talked about. So I'm just gonna say that we're basically up 13.2% month over month from October to October, 2021 to 2022. And we're up 8.4%. So people are listing their homes for more money on average which is sitting right around $501,000 for the city of Chicago in 2022 year to date. Now to round out the end of this pricing section, we're going to talk about percentage of original list price received. So 96.9% versus 96.7, literally the exact same, 0.2% decrease. 97.5% year to date versus 98.1% year to date 2021 to 2022, which is a 0.6% increase. So homes are being listed and they're selling for a very similar amount of original asking price versus the amount that they actually sell for, which is sitting right around 98%. So if somebody's listing at $500,000, they're getting on average about 98% of that in a sales price. So this is really good information. If you want me to send you some of this, you can see here on the screen, this goes in a lot more detail than I'm going with you today. I'm just kind of using the summary page, but I'm more than happy to send this out to you for any of the neighborhoods throughout the city of Chicago. This actually is available for all of the properties in Chicago, but also individual neighborhoods and property types too. So if that's of interest to you, feel free to just text me or send me an email so that we can get this information over to you as quickly as we can. All right, so now switching back to the camera here, that is all we wanted to do on the screen today. But now I have my handy dandy notebook and we're gonna talk about the opportunities and what this means for you. And we're gonna talk about this through the lens of a buyer, through the lens of a seller, and then through the lens of a renter and investor. So there's gonna be 4 different categories on what this means for you. So let's start with buyers. So we all know it, interest rates are the main thing here driving buyer demand. I personally think interest rates, they're starting to come down. So at the height, we were almost at like 8%. It was like 7.75 or 7 5/8 essentially, somewhere in that range. And in the last couple of weeks, we've started to see inflation numbers coming down, which is what the goal of the Fed was. And even though we're probably gonna see about a 0.5 point increase on the prime rate again when the Feds meet here in December, I think that the mortgage rates have already taken this into consideration. And I think we're starting to see this level out. So right now, interest rates for a 30-year fixed are somewhere in the high 6s. And if this continues to decrease and this lands somewhere between like 6 and 6.5%, I think buyers are gonna flood into the market and there's gonna be another frenzy of buying. And the reason for this is now expectations have shifted, right? So we all know, pretty much anybody out there that's in the market to buy or sell or thinking about buying and selling, they know 3% was kind of a historical number that they're no longer gonna get. But if they can buy around 6% or 6.25%, this is gonna look like a really good rate now that we have the perspective of almost 8 compared to 3, right around that 5.5 to 6.5 range, I think is gonna be the sweet spot where people are going to see this as a great rate and they're gonna capitalize on the opportunity of buying in a market where the market is shifting slightly, sellers are a little bit more motivated and they wanna sell, so they may be able to negotiate a little bit more, even though they're paying a higher interest rate. And a lot of people are throwing around the term or the phrase, marry the house, date the rate. I think this is probably not the best advice. However, best case scenario is you do buy it, let's just say 6.5% today, you're able to negotiate 10% off asking price. So the net effect of here in the long term is you're actually getting a better deal by negotiating 10% off of list price versus paying 2.5 to 3% higher on an interest rate over 30 years. And the reason for this is because very, very few, I think it's less than like 2% of all buyers hold a 30-year fixed mortgage for the duration of the 30 years. Most are 5, 7, maybe 10 years, and then they're either moving to something else or they're refinancing when the opportunity presents itself somewhere within that. If you buy today at that lower purchase price, best case scenario is in a year or so, you can refinance. Worst scenario is interest rates go through the roof and now you've secured one at 6.5 or 6%, whatever the number may be when you decide to buy. And then kind of the middle ground is rates stay relatively the same, no harm, no foul. So as a buyer, and specifically as it relates to investor buyers, I think there's a crazy, crazy opportunity in the next 6 months to go out there and find some killer deals. Now as a seller, it's gonna be a little bit more challenging, right? And this is where you need to get really hyper-focused on who the agent is that you hire to sell your home. This agent needs to know how to price. This agent needs to know how to market. Specifically, yes, old school ways, postcards, open houses, old school picking up the phone, but also through social media and through their online presence. So working with somebody that has the ability to expose your home to the widest pool of buyers in this market where the overall buyer pool is less is gonna be critically important. And then somebody that also knows how to prep your home for sale and give you staging, decluttering, and those type of recommendations. As a seller, you're also gonna wanna make sure that you're pricing ahead of the market versus too high. The worst thing you can do in a shifting market is to price it a little too high. My recommendation always in any type of shifting market and in general is to price aggressively, either right at fair market value or even slightly under fair market value, so that you attract as many buyers as possible, getting as many eyes on the home as you can. So then hopefully you get enough people through the property. It creates a fear of loss equation, and people offer their best offer out of the gate. If you price too high, you're gonna get buyers that see that it's priced too high compared to the competition. They're gonna come in and lowball. So in my experience over the last 9 years, if you price it right at fair market value or slightly under, you're gonna end up with more in your pocket at the end of the day than if you price it just slightly too high. The worst thing you can do is to miss the mark just by a bit and then have the market. So basically you price here, the market's shifting, coming down, it never sees your property there. Versus if you price here and the market's coming down, now your home is met when the market is coming over the top and starting to fall a little bit. And I'm not saying home prices will fall drastically, but even if they go 1% or 2 down, making sure you're 1% or 2 less than that is gonna be important so that you capture the buyers looking for that type of property. The last thing as it relates to sellers is you need to have your place spotless. You need to have really good photography, preferably some videography. You need to have it staged, decluttered, clean, and you need to make small improvements just to make sure you maximize the value of your home. Right now, the last two, we're talking about renters and we're talking about investors. So if you're an investor, I think it's gonna be a great time. And the reason for this is as affordability continues to go through the roof with higher interest rates, inflation, things like that, less people having money to actually save for a down payment and to get into home. I think we're gonna see a lot of people be sidelined from the buying market and continue to rent. So as this happens, as more renters are in the market, classic supply and demand, rent prices are gonna go up. So if you're an investor and you're buying, whether it be multi-unit or multi-family properties, where you have renters living in these properties, well, you're probably gonna be able to get higher rates, right? So if you're an investor, you can buy at a good price, you can negotiate because the market's changing a little bit, so you don't have to pay over ask like you had to do over the last couple of years. And now you're gonna negotiate a great price on the property, you're gonna be able to increase rents, and then over the next 12 to 24 months, rents are also going to increase. So I think it's a great time for investors. I'm personally in the market to buy a couple properties in the next year, and I think you should be as well if you're thinking about investing in real estate. And then as a renter, it kind of just goes off what I said last, which is rents are gonna go up. So there's gonna be more people competing for less properties, and you're gonna be in this mix. So if you are ready, willing, and able to buy a home, even with interest rates being higher, it's going to make a lot of sense. I see the difference between the affordability of renting versus owning becoming a little bit more even as interest rates continue to settle and come down a bit, and as more renters continue to be renters and rents continue to increase. So that's it. That is your November market update for the city of Chicago. I hope this has been helpful. I have never done a video like this before, but I really think it makes sense to really cut through all the BS and all the noise that's out there and look at the cold hard facts. And that is my job, and that's something I take very, very seriously, is to make sure that I'm your grounded real estate advisor of choice, that I am actually giving you the details on what is actually happening versus what people are saying is happening, because I'm boots on the ground with this every single day, 365, and I've been doing it for the last 9 years. So I take this very seriously. I'm a student of my craft, I'm a student of the industry, and I'm highly involved. So I see what's happening beneath the sheets versus what you see on all the headlines. So I hope this has been helpful. If it has, please do me a favor and like, comment, and subscribe. And if you're thinking about making a move in 2023 or you're moving to Chicago, my team and I would love to help. I'm gonna throw my number up on the screen right here. Feel free to text me, and we look forward to the opportunity of serving you. All right, until the next video, peace.